Good morning, everyone. In today's session, we are going to discuss with our panelists the key recipe for an IPO success story, and we are going to go through the key milestones and the key lessons that a company would go through for a successful IPO. We have two panelists, a vice chairman and a CEO of two companies that went public in two different markets, one in Kuwait Stock Exchange and the other one on Tadawul. They are going to share with us more insights about their journey during the IPO process. And let me start by introducing Mr. Rawaf Rusli, who is joining us remotely from Kuwait. Mr. Rawaf is the vice chairman of the board of directors of Action Energy. It's a leading oil field service provider founded in 2015. It went public December 2025. It's listed on Kuwait Stock Exchange and successfully raised $180 million. On my left-hand side, I have Mr. Ruben Bilen, Group CEO of CGS, which is a leading company in cold chain technology in the Kingdom of Saudi Arabia, founded back in 1976 and successfully went public in November 2025, listed on Tadawul, the Saudi Stock Exchange, and successfully raised $80 million. So with this introduction, we can start our discussion with Mr. Ruben. So Ruben, just I want you to share with the audience, what are the first three matters that you decided to work on when you decided to do an IPO?
First of all, thank you for having me. It's a pleasure to be here with you and Rawaf today. When the decision was made by the founders to take the company public, I'd say the first three things that we did, maybe the most important one, is investing in the team. We heard this morning His Excellency mentioned investing in people. I think this, for us, was a critically important area. What do I mean by investing in the team? First and foremost is the existing leadership team. That leadership team had worked in an environment that was a medium privately held company for many years, and really making sure that from a change management perspective and journey, they understood the rationale for the founders to decide to take the company public, and to really help them understand what that was going to mean for the future in terms of their roles and how they led the company. That was a big part of the initial time investment on the part of the CEO, as well as others. That was a crucial step, because at the end of the day, like in business in general, you're only as good as the team you have, and having that team fully aligned and on board was very important. As part of the investing in the team was also to recognize that moving from a privately held company to a listed company was going to require adding more horsepower to the company. What do I mean by that? Of course, we went from having a private board to an independent board with independent members that would be listed company ready. So making sure that we had the right profile and mix of people on that board to really bring value for the long term. That took quite a long time and effort, particularly from the shareholders, but also from others as well. And then making sure that you've got the right people in the right places. So there's certain expertise as a listed company you must have that as a private company you may not need. For example, internal audit function, strong, legal compliance function, and we invested in those areas as well. And lastly, I think it's the team. So as you make that decision to go IPO, it's making sure that you surround yourself with the right team of advisors that's going to help you through that journey as smooth as possible, and ultimately to have a successful listing. And so choosing that team and onboarding them, at the right moment and early enough, and investing in those relationships and partnerships, I think that was something that was very important. So I'd say that's probably the first element, is investing in the team. And maybe Ahmed, I'll ask you, given that you've been involved in many IPOs yourself within the region, what's your perspective on, from an advisor perspective, how important is it to get that right as you see it?
I think from my experience, the first thing that companies will need to work on is financials. Financials is key, and I've seen a lot of scenarios where the preparation of financials actually dragged the IPO timeline. So it's very important that any IPO candidate to work on their set of financials very early on, because this is one of the long lead items that can easily consume a lot of time and can easily drag the timeline of the IPO, because without financials, the company is not ready. And these are the set of numbers that will be shared with investors. So without having this ready in a proper shape that reflects the IPO parameter, definitely this is one of the things that you have to work on very early on in the process. And as you just said about the team and the personnel around you, and I think one of the things that is more of psychological readiness is the change in the mindset. You need to mentally change the mindset from managing the company from private to public. And I think this needs to take place first in the management minds before actually it's being implemented physically on the ground. The mind itself will have to change. I think that these are the two things that I would certainly recommend to any IPO candidate to consider early on. And of these three matters that you worked on, which one of them actually took the most longest time?
Investing in the team, because that was a process that started from the day the decision was made that the company would go public, literally until the weeks leading up to the point of listing. So that was probably the part that took the most time, and ultimately is the part that I think added the most value in the journey.
Excellent. I don't know if Rawaf can hear us.
Yes, Ahmed, I can hear you.
Great. Nice to have you, Rawaf, remotely. So just moving on to one of the very interesting topics of any IPO candidate, which is the equity story. So how did you develop your equity story? Generally, we've seen IPO candidates just preparing themselves and putting together the equity story ahead of even appointing the bankers. And some other IPO candidates would just wait until the bankers are on board for them to start doing most of the thinking behind the equity story of the IPO candidate. Please share with us your experience on crafting the equity story, and when have you started working on that?
Well, thank you, Ahmed, and good day for you. And I'm very happy to be joining you and Robin today. It's an excellent question, because equity story is actually the ownership of the stakeholders of the company. It has to be developed by the company itself. We have a saying in Arabic, it says أهل مكة أدرى بشعابها, which translates to the people of Mecca knows its values the best. Advisors and bankers are essential to be involved at an early stage to understand the equity story. However, the pure equity story and the building of that equity story has to be done by the management who knows the ins and out of the business and can convey that story to the potential investors.
And
first option
typically, we always see that investors might get
يعني
something
دلوقتي لو
wrong
انت
or
كل اوبشن كله قال
misunderstand
لك
about the
يلا
company.
عايز
So what was that thing, if you faced it? What was the
بعديها
constant matter
yeah, things
that
that there.
typically investors would misunderstand about the company, and how you
هقول درهم.
evolve the equity story to address that
انت عايز يو سي ال اكتر من
misunderstanding,
درهم؟
if you come across this?
Yes, but as I mentioned, involving your advisors and bankers early on will avoid having this misunderstanding. In our case, with Allah grace, we didn't face such an issue. The equity story was developed very well by the team.
على
The
فكرة هو
company
انت فاهمة
has
ان انا
an
انا
operational
توب
platform that been established more than 10 years ago. The management and human capital have been involved in the company
ماشي بس
more
انا
than
بتكلم على
50%
نقطة
of its
توب
tenor. So we didn't really face that.
ايوه
So, but again,
الفاونديشن
back to
هي
your question,
نفس
my advice is that to develop your own equity story and share it with the advisors in an early stage in order to avoid the misunderstanding that
فانا
you
used
created.
derm
Thank you, Raf. And
Kings
you know, one of the things that I always ask my clients when
Warwick
they come and discuss the IPO plan
في
is,
اللي هو مانشستر ضايع
why do you want to do an IPO?
ضايع
I
ضياع
think this is a key question that I always ask my clients, because sometimes, and it happened to me a couple of times, that clients
هو
will
هو
want to
لا
do an
هو
IPO
كان
just for
ناقص
prestigious
درجة
reasons, and to me it's a very big turn off, because there is no point to
لا ده بريستل
completely
ده كانت
transform
حالة
the company from private to
دي
public
كانت
just
حالة
for prestigious
يعني
purposes. So I want to ask
بايظ
you,
يعني هم
what
المفروض
was or
يعملوه
what were the reasons or the underlying rationale behind the company's decision to
UCL
move from
Durham
private to
Kings
public?
Warwick
Exactly. This actually brings us back to the basics
بعدها
of it.
مانشستر
Why do you want to do an IPO? Why does a company needs
بعد
to go or
مانشستر
wants to go public? And in our case, our strong point was the growth, and we needed to grow. And in order to grow, we needed to actually have the right compliance and governance and the access to capital markets, which are the basics needs for any company in that case. So our IPO came as a natural step for us in the tenor of the company. And the reason we've done it is again is to achieve the governance, which is very essential for our clients, and the access to capital markets, which is very essential to continue our growth.
الجو فيها صعب صعب
Thank you, Raf. So,
الجو فيها صعب
Ruben,
بس أنا الصراحة عاجبني
there
الموضوع
is a capital market joke
بس
very popular in our
يعني
sector,
تطلع يعني
that they say that IPO stands for it is probably overpriced. It's a silly joke, I don't like it,
يعني
but it just touched upon one of the key
يعني
matters about a successful IPO, which is pricing, right? And there is always a dilemma that always face the management, whether to really maximize the valuation of the company, right?
في واحد
Or you can just accept a little bit of a haircut in terms of valuation. So you can have a better aftermarket performance. And to be very honest with you, investors would make money on the IPO, which will eventually pave the way for another IPO, because you just need one IPO that people make loss on it, and it can easily kill the market for months and even sometimes for years, and I've seen that firsthand. So tell us your experience and what you've been through in determining the sweet spot when it comes to valuation and pricing.
Okay. First of all, I think you mentioned a point that's very important. An IPO extends beyond the company in terms of its reach and the impact it can have, right, on the broader market and the environment. What I mean by that, it's not only about how successful the IPO will be from a subscription perspective, etc., but how people feel, investors, the way I look at it, an IPO impacts everybody's credibility collectively. The founders, the leadership team, the advisors that are on board that want the IPO to be successful as well. The capital markets authorities and the regulators, of course, want to see the IPOs go well, and investors that are going to invest ultimately want to see a benefit, as you said. So if you keep that in mind when you have those discussions, again, there's no perfect formula for this, but being open, being transparent, and listening to all of the feedback. In our case, the founders had a certain view. The advisors that were part of the team had a view. We got feedback through early look meetings and the book building process from potential investors.
الكيس
And
الوحيد
I
اللي
think
انا
when you
اعرفه
bring all
بتاع
these views to the table and you
freedom
balance
of
everything out,
speech.
this ultimately helps you to get to a good
انا
answer.
عارف ان
And,
الجامعة
and for every company,
مدرسة
where's that balance between
دفع فيها 500,000
feeling like you've left something on the table, but also leaving room for, as you said, appreciation after post IPO? There's no perfect answer here, I would say. Every company is different. In the case of CGS, we were in a relatively unique position in that there were really no benchmarks, both locally or regionally, for the type of company that was going to come to the market. So it was quite a unique value
So no
proposition.
competitors to benchmark against it.
Exactly. So that made it, on the one hand, a challenge, but from an investor perspective, also interesting or more interesting because it was going to create some diversification of the portfolio. Our previous, if you heard the previous session, the speaker had mentioned, diversification of the market being something that was of value, and we believe CGS was going to bring that to the local market, also the region. And we were very confident in the long-term prospects and the equity story and the value proposition of the company. And that allowed us then to come to a place where we felt it was fair for the organization and for the founders, but also then was going to leave room for upside. Look, at the end of the day, any company that goes public, it cannot be about what the share price is in the first weeks or months. It's about what kind of shareholder value you're going to drive over a longer period of time. And I think if you go into the process with that mindset, listen to the various voices at the table, you'll come to the right answer for your organization. If it's if you're in this room and on the path and journey to an IPO like we were this time last year when we sat in the room, I think that's, from my perspective, what would be important. Listen, absorb, but then ultimately as a team align, make a decision. In our case, the founders, the advisors, the leadership team, we're all on the same page in terms of where to anchor that.
What was there a gap between
in the middle of the thread بتاعت
founders' expectations and bankers' advice?
To be honest, we're very fortunate as a company. I think the founders have a very long-term view on the organization, even in terms of their involvement post-IPO. They see being involved in the company, for a very long time. CGS is reaching a key milestone this year, 50 years in the Saudi marketplace. And the founders see, being involved for the next 50 years or more. So in that sense, they were quite open to the feedback from others. The gap was not very big. I think, the outcome speaks for itself. Our IPO in relatively challenging market environment late last year reached an oversubscription at an institutional level of more than 60 times. And other IPOs didn't necessarily see that. So I think, as I said, there's no perfect answer. There's no one answer for this question. It's more making sure that all the stakeholders are aligned and you go to the market with conviction. Your story is clear. And ultimately that should lead to a successful IPO in my view.
And, a number of IPO candidates believe, or sometimes they were under the impression, that the bell ringing in the stock exchange floor would announce the end of the journey or the end of the IPO. In my opinion, this is pretty much the start.
عودته نفسيا بقى
So,
نساب البلد اللي قعد
there are a
فيها
lot
ده
of
يفشخه
actions that needs to be made, either before or after the bell ringing when it comes to investor engagement. So, if you can just share with
هيترفع بقى
us
قضية ومليون بقى مكتب هياخدها لأنه عارف
views
إنه
on
هياخد
investor
فلوس
engagement, whether
بالعبيط.
you
ممكن
actually
ياخد
started
2
to
3
work
مليون
on
دولار.
investor engagement post the IPO, or have you started this
ده
a
من جامعة
little
تانية
bit
قبلته
earlier
وهو درجاته
than the
عالية
IPO?
وإيميل
And,
بتاع بروفيسور طلع
the
بالشكل
difference
ده.
that you've seen before and after the IPO.
As you correctly said, anyone that believes that the IPO journey is over on the day of listing and ringing the bell, I think, that's probably, pretty far from the truth. I can tell you now we're just coming up to the 6-month mark of being listed. And every day, every week, every month is a learning journey for us as a listed company, and we're developing in many areas, including investor relations. As a company, we don't have a dedicated investor relations team currently in the organization. We use the support of Arcom for certain elements, and then of course as a leadership team, we invest time and engage with investors directly. And I think in the early days, this is very important. Investors that haven't been with the company for long don't know the history. I think what's very important in those early days is to be as open and transparent as possible. So we take as many meetings as are requested from us. We make sure we make time in our busy calendars to have those meetings with investors, whether they be existing investors or prospective ones. Of course, there's a limit to how open and transparent you can be. A lot of investors are looking for, sometimes a little bit of an edge or an inside track. So, we of course need to adhere to, capital markets regulations, but being open about where we see the company going, where we see the market going, having frequent touch bases. Some investors, for example, like to touch base every few months. Some you hear from less. So I think having an agile approach and somehow allowing the investors to guide you a little bit too as to how much they want to engage and how much they don't. I think that's important. And for us, again, we're still learning. I'm sure if I was sitting here a year from now, I'd have more learnings in this area. But what we've learned so far is this for us is a phase of building credibility and trust with investors as best we can. And we believe that's going to serve the company and investors, the best in the long term in terms of our future journey.
Is there like a piece of advice that you would give to an IPO candidate in relation to investor engagement post-IPO?
As I said, I think the one piece of advice would be make time for it. It's very easy once you've done the official part of the IPO and you're listed to say, okay, let's go back and just focus on the day-to-day business. But, knowing that as a listed company, part of your obligation is to be open to those external stakeholders and to make time for them. That's very important. And then we make a conscious effort to do that as best we can and give time. And I think for any company that's newly listed or about to list, keeping that in mind is very important. And depending on the size of the organization, if you can invest in more horsepower in this area, this is also, of course, an added benefit for the future. I mean, investor relations adds value. That's really, from my perspective, what I've seen now, what we've done over the period of time. As a listed company, the obligations increase, right? One of the clear benefits I see for anyone in the room that is on that journey now of being listed is to get that external feedback, right? We look at feedback, sometimes it's a cliche thing you hear all the time, feedback is a gift. In this case, I really believe it is. Some of the questions were asked, some of the thoughts that external stakeholders raised that maybe internally previously as a privately held company we didn't think about, even when it comes to the the strategy or the equity story and how we articulate that all adds value. So be open, absorb as much of that external feedback as you can, because it never hurts, it can only help. And in our case, I can tell you it's been quite useful over these months to get some of that feedback. And sometimes it's quite candid, and it's things that you may not want to hear, or it challenges some of the assumptions that you've held as given for a long time as a privately held company. But take that on board. It definitely helps. That would be my one advice there.
So, Rawaf, as we were just discussing a couple of points earlier, one of the things that will actually change after the IPO would be the mindset and how the management of the company will or should behave, right? Because when the company is private, you run the company the way you run it, but once the company becomes public, you have to have a change in mindset whereby you will always take into consideration the best interests of public shareholders and other connected stakeholders. So from your perspective, what are the things that have materially changed in your company before and after going public?
Yeah, actually, as Robin have mentioned, the IPO is a journey that doesn't end with ringing the bell. Eventually, the IPO, when you bring a company from a private company to a public company, there is a huge burden that will come on the management and on the management structure itself. So the stakeholders, the new investors, would require clarity, would require transparency, and as Robin have mentioned, which I totally agree with him, is that you have to allocate time to answer and meet with your potential investors and current investors in order to transmit the right picture within, of course, the capital market authorities framework.
لا في الايميل
Now,
يجي
from an
على
operational point of view, of course, being a public company, having that transparency, there is a change of culture that has to be transmitted to the company itself. And a lot of companies actually have a problem doing that because they do not prepare their workforce and human capital for that change. And as you know, humans tend to resist change, which is normal. So what the management has to work on is actually to embed that change structure of transparency, clarity, governance into the company body prior to the journey of the IPO, in order not to spend much of the time after the IPO or after the listing of the company into that transition, but go back to the basics and focus on the operation of the company. So in my point of view, and my advice actually for whoever in the audience is willing to take that journey, is actually to work on that transition within the company prior to the IPO. And that's very key in order to save your effort, your time after being listed from going into that transition, which will affect probably the company operation or the company structure. So that's a very valid advice. I believe that, I can transmit from the experience that we had to the audience.
Thank you, Raf. And now, since the IPO is already completed now, and you've seen the company public, if I give you a time machine that would allow you to travel to the past, would you do it again?
Well, that's a very interesting question, Ahmed. Thank you very much, actually. I'm not a big fan. Actually, I'm a big fan of science fiction, but I'm not a big fan of time travel. So if you believe of the relativity theory of Einstein, you know that actually time travel would have its negativeness. And there is no positive in it. So, of course, anybody who has done any journey have gained knowledge and experience. And if we all had that knowledge and experience, we'd not be where we are right now. So the knowledge and experience that you create through that journey is essential. However, given that it's not feasible to go back in time, I believe that you can invest that experience into, as thankfully Arqam is doing, by advising the others, by engaging with other stakeholders in order to transmit that experience. Of course, all of us has negative experiences in any transaction that we do. No transaction is perfect. However, the main issue would be the outcome. And as far as we in Action Energy, I believe that we're happy with the outcome, alhamdulillah. With God's grace, we have achieved the target. We have pleased our shareholders, and we believe that there is so much value that we can still present. And we look forward actually for sweeping out the negative experience that we had. However, it's not really negative, so the audience will not misunderstand me. It's from a timing point of view, sometimes you have to take decisions that are earlier, and I think for us it was in our experience, we could have done better if we actually had a better understanding and we had a better engagement, early engagement with the potential investors. That would actually, as Ruben had mentioned earlier, it will help to convey the right equity story. Because again, you cannot please everybody, but you know, if you listen to everybody and try to adapt everybody's point of view, you will end up getting actually a much more understandable equity story that will actually be conveyed in the right manner.
Thank you, Raf. And
عارف انا شفت حاجه غريبه أوي.
moving
أنت
from
عارف
science fiction to
وكال
magic,
ليبتن كات
and this is off the script.
اه
If you would allow me to
عندهم
ask you
أوفيس
one
بس
question.
Please.
If I give you a magic
بس
stick
مانهاتن بس
and you have the opportunity to change
عندهم
one
200
thing
واحد بس شغال.
in the IPO process that you did, which one thing that you would change?
Congratulations to who?
Sorry to put you on this
No,
spot.
it's okay. It's a really good question. I think, look, CGS was very fortunate. We had a relatively smooth IPO journey because of all the, you know, preparation that was done, onboarding, you know, the right team at the right time. So really, when you think about what would be that one, you know, moment you would use, I think we had one moment in the process where
عندهم 200 واحد شغال.
there was a bit of a momentum loss, and this was after we had filed our application. A particular subject came up, and we realized that we were going to have to update our file. And you can imagine the effort that the team goes
على
through.
فكرة
You're
هو
running the
زمان
business day to day, and many of the same people are also
كان بيعمل
then
6
fulfilling the,
مليار
you
وده
know,
اللي هو
requirements for listing and submitting an application, the legal due diligence, the financial, all those things. So once we had submitted, you know, there's a natural tendency for everything. Okay, that part's done. Let's now focus on the business. And very quickly we had to go back to updating certain elements, including certain elements of the DD. And I think, you know, if there was one thing I could change, is
ما ده اللي انا بقوله كيركلاند
go back, and you talked about financials at the beginning, revisit some of the earlier years.
كيركلاند 13
You know,
مليون
when
دولار.
you're submitting an application, of course, it's a 3-year set of financials. In our case, there was something from the earliest year, relatively insignificant in the overall context, but created a lot of extra work and ultimately, you know, delayed our IPO by several months. So if it was one moment I can say we would go back is, you know,
12
have a even greater focus at the very beginning of the journey on making sure that, you know, you've looked at things 3, 4, 5 times, and any challenges, as insignificant as they may seem at the time, address them early. That really helps to save a lot of time down the road, I would say.
No, thank you for that. So if we can just wrap up, you know, the key points that our panelists kindly shared with us. In bullet points, I would say one, readiness. You have to be very well prepared
$1 trillion
ahead of time. Don't wait
$1 to $2
until
trillion.
your shareholders or
highest
founders
valuation
tells
IPO.
you to start the IPO process, because probably by that time it's too late. So you need to have all the housekeeping of the company always ready. So when the shareholders wish to pull the trigger and do an IPO, the management is ready. 2, don't try to time the market, because no one can. The only way you are going to do that is basically to keep an eye on competitors. You need to keep an eye on macros, just to ultimately decide on the right time. Because, you know, any important decision in life, it's all based on the time when such decision is being taken. It could be the right decision, but if it has been taken on the wrong time, it could lead to a disaster. 3rd point, pricing. You need to listen to your bankers. You need to know your company inside out. You need to have and keep an eye on competitors and the market, so ultimately you can reach the sweet spot of having the right valuations. Because you don't want to maximize the valuation and then ultimately after the bell ringing your share price tank, and then you will be the biggest loser, because ultimately you will keep holding 80% or 75% of your company. So if the share price goes down 10%, for example, you will be the biggest loser. the flip side of the coin is if the share price goes up 10%, you will be the biggest winner of such upsize. So just make sure that pricing is done correctly. And from a macro standpoint, pricing is basically very important to pave the way for equity capital markets to roll over the next IPO, because the market may need one IPO that is wrongly priced and people lose money, and the market can easily shut down for months and sometimes for years. And we've seen that firsthand in previous circumstances. One piece of advice that maybe was not discussed with the panelists, but from my experience, for any IPO candidate, don't make the recruitment process of your advisors based or led by a procurement driven process. Don't try to play smart. Don't try to save a couple of bucks just to get an advisor that will undercut other advisors. Bring the best, because the company will do an IPO once in the whole lifetime of the company. So you better do it right. Don't try to save, because you will pay either way. If you are not going to pay money, you will pay it by bad experience or mistakes that could be irreparable. And I've seen that companies that completely blocked their aspiration to become public because of a wrong piece of advice from one of the advisors. So please don't try to be smart on the hiring and recruitment of advisors. Make sure you get the best. Make sure that you bring someone who did that multiple times, rather than bringing someone that will give you 10, 20 or 30% discount who will learn on the job. That's my piece of advice. And ultimately, I think we've reached to...
Sorry, Ahmed, if I can just, you raised something very important. And I'm just going to raise two final points from my side, if time allows. For the simple reason that when I was sitting in this room 12 months ago, if I'd heard this, I think it would have been useful. I mean, two key lessons from my side for anyone in the room that's either already on the journey or contemplating the journey to take the company public is, number one, start behaving like a listed company long before you will be one.
100%.
What do I mean by that? We onboarded an independent, enlarged board of directors well before we needed to give us time to practice some of the things that we would absolutely need to have in place by the time we were listed. Audit committees when we didn't have to have audit committees. NRC meetings to understand, sort of governance and policies around compensation and where we would need to go. We deployed forecasting tools and mechanisms in the business when previously the company really wasn't thinking in that way, knowing that in the future as a listed company, you have to provide guidance to the marketplace, So it's not only about what's happened in the actuals, it's more important actually what's coming in the future. So behaving like a listed company well before you need to, this solves a lot of challenges, prior to listing, and it helps the whole organization. Rawaf said it earlier, it's about people. And sometimes change is not the easiest thing, but the earlier you start to implement that change and embed it in the way you work, the more natural it becomes when it really counts, For example, we took our finance process closing from 10 days to 3. That was a big effort. Why did we do that so early? We knew that when you're a listed company, you have 40 days to publish your results. Within that 40 days, you need to finish the internal work. The auditors need to do their review and sign off. The audit committee needs to be engaged and sign off. The board ultimately needs to approve. So you've got all these steps that weren't there before. So it was imperative for us to change our internal process, not when we needed to, because it's almost too late early enough. So that's, I think, lesson number one. And the second one, it's a little bit connected to what you said. While you can have the best advisors in the world on your team, please do not take the process as something you can outsource to somebody else to say, that's why I've hired advisors, they're gonna handle everything from A to Z. Of course, having great advisors, as you said, definitely brings a return to the IPO. But as a leadership team, even as shareholders and founders, being active through the whole process, including the equity story development, this is critical. Never shift your accountability to somebody else, otherwise you get outcomes at the end of the day that are, not intended. So be engaged through the whole process. I think this is the other thing I would say. These would be the two sort of key lessons, as my sort of final points or
No, thank you.
takeaways for everybody.
Yeah, it's. I think it's very important. And on your first point, it's always healthy to have engagement before marriage. So at least you practice loyalty before
Exactly. I like
before marriage. So I think this takes us to the end of our session. Special thanks to Rawaf Borzili, Vice Chairman of the Board of Action Energy, for joining remotely. It was nice having you, Rawaf. And of course, many thanks, Ruben, for joining us.
Thank you.
Group CEO
Thank you.
at CGS Holding. Thank you so much.
Thank you. Thank you.